Hi, we're talking perception versus reality and the November real estate market in the Pikes Peak region. So, perception, the market is screaming hot. When I've gone out of town or when I go to events, people talk to me and they go, wow, you must be so glad the real estate market's improved so much. There's a past tense aspect to that. The trailing news is caught up with the masses. And people are saying, wow, it's really, really good. It's especially that case if I go and attend anything in Denver, because the Denver market still is clicking along quite amazingly. What they're up percentage-wise varies neighborhood by neighborhood, but you'll see gains from 6 to 20% in the Denver metro area. Now, CoreLogic, they're one of the big data holders of information out there. They reported yesterday that they're seeing a trend nationally that the real estate market is beginning to cool off because the month-over-month appreciation curve has slowed down on a nationwide basis. And they said this coolly and matter-of-factly, and that was based on a 12% appreciation rate. Actually, we're going to say 12.1%. That's the national rate of appreciation according to CoreLogic. 1 year ago, we were 12% lower in prices. That's the perception. So we'll give it a big P over here for perception. The reality sits over here. This is the Pikes Peak market. 12.1% is the national appreciation. We're 6.9% higher over the year. That's all that we are higher. That's a good year. We were projecting at the start of this year a 3 to 5% growth rate in sales for the Pikes Peak region. We thought it was going to be closer to 3%, not 5%. And so it's at 6.9%. So on that one, we got wrong. We were wrong. It's better than that. But it's still not 12.1%. When people say, oh, it's so good, it's so strong, these two are not the same. Here's a couple big numbers right here, 929 and 9398. We are on pace right now for about 10,800 real estate closings for the calendar year 2013. That would be a significant number of sales, the highest since 2006, which was around 11,300. So that'll give you an idea as to how big the volume is that's pumping through the system right now. That's a really good year. And last month we had 929 closings, which was the best October since 2005. That was better than the 2006 sales year. But here's the little number within the number. We are down 13% right now. Give you a big negative, 13.1% on pending sales compared to where we were last year. We're actually lower than the 5-year average on pending sales for this time of year. So if you're going back from 2013 through 2009 and you average how many pendings and under contracts you usually have in the system right now, that's an indicator of future closed sales. We're below average right now, which means that the volume that might close this month and the volume that might close next month and the volume that might close in January is reduced. Permitting activity right now is about 10% lower than it was at this time last year. We're going to have a year that will see a 20 to 30% increase in gross number of permits for the year, but as we wind down in the second half of 2013, the rate of new construction is also slowing down. 9,398 closed sales through the month of October. That's a fantastic year. You're averaging right about that number that we closed in October on a monthly basis. Pretty tremendous. 247,000 is the average sales price in the Pikes Peak region. The median sales price is at 218,000. We're seeing some real health there. And we have a 65% probability of sale. We like to talk about numbers that nobody else talks about, and this is one of the big ones out there. And I will circle this one in red because this one lines back up with the perception. The perception that the marketplace has improved. This is the danger of mass groupthink. This is the danger of buying into what everyone else is selling. We have a 65% probability of sale this year, which will probably end up at 66 to 67% because we're not going to see many new listings in the last 60 days of the year, and we'll be selling off the inventory that's already sitting out there. What that's going to do is it's going to catalyze new transactions into the first quarter of 2014. That will bring new sellers on the marketplace, and those are new sellers who are coming on. They're not coming on now. Why are they coming on in January, February, and March? Because of that reason. 12.1% appreciation. Well, CoreLogic says we're up 12%. Yeah, CoreLogic's talking about 50 states and thousands of counties. They're not talking about one county. We're talking about El Paso County, which is up 6.9% for the year. People who are waiting to put their houses on the market at another time are doing so because they think A, it's more likely to sell, but more importantly, B, they think that they'll get more money for their house. And when we have a 65% probability and we've had 6.9% growth, those numbers in groupthink equal this number. And you can see that doesn't really work. 65, 6.9 don't equal 12.1. You know what I'm saying? So with that sort of marketplace, we're giving you a little bit of warning going into 2014, which is that we're calling for a flat year next year. We're going to see a year that'll have fits and starts, and we'll probably see a higher amount of inventory out there. Right now, we're just under 4,000 listings that are for sale in the Pikes Peak region. This time last year, we were under 3,400 single-family listings. It's about a 15% heavier marketplace in terms of gross listings that are for sale. The reason a lot of those listings are for sale is because they're overpriced. If you're going to put your house on the market in the next 2, 3, 6 months, do not mess around. Do not put your house out there based on the mass groupthink of what reality is. Put it on based on the facts. This is the real reality, and this is the perception. It's our job to help you use data effectively so that you can make decisions constructively.